What is up, guys? This is Andrew Capital. Welcome back to another video. Today, we're going to show you how to dramatically increase your win rate when it comes to the silver bullet. No messing around. This is going to change your trading strategy, give you the edge that you're looking for, and get you to consistent profitability to know where the liquidity is, where is it going to, and get funded past any challenge. Let's get into the video. All right, so our steps here are going to be as followed. We are going to mark out our previous session highs and lows of the day. Okay. Then whenever we get to our silver bullet window, whether it be London, right? London is 3 to 4 a.m. And then New York, you have 10 to 11 a.m. And then you also have the New York PM from 2 to 3 p.m. Now, this is all UTC -4 New York time. Okay. New York time. Okay. Now, once a high or low of the day is swept or liquidity is taken, I suck at typing. Then we're going to wait for a shift in market structure, displacement, which is just another word for like a volume candle. This displacement or volume candle is going to leave behind what we call a fair value gap, right? FVG, or a gap in price. It's going to be moving so quick that it's going to leave the next candle that closes after that volume candle is going to leave a gap in between the three candle pattern. Okay, so let's go to our first example here. Alrighty, so for me, my day starts at midnight open. Okay, so we have the midnight opening price at 12 a.m. here. Price opens, so we have this purple line is the midnight opening price. We open, trade down, create this low, and then we rally higher into the London session here. And then we create this high, and then come right back down to midnight opening price, rally higher, back down, up, back down, right to midnight opening price. So this is not technically the exact London session, but I just like to call it the London lows. This can also, you can also call this the low of the day so far. So far, right? Low of the day thus far. Okay. So this is the London session high. This is technically the Asian session lows, but this is the low of the day. So this is our range, our daily range so far for this day, Monday, June 12th, right? This was this morning. Now, I don't trade Mondays just because it's not in my plan and I'm disciplined and stick to it. So even though we had an awesome run today, I'm not worried about it. So you have to have that same discipline, that mindset. It's okay to miss a day of trading. Stick to your plan. It's going to build discipline. So moving forward here, we have our range, right? So if we drop down to the 1 minute here, our trading window for my strategy, which I use ICT's silver bullet strategy, it's from 10 a.m. to 11 a.m. New York time. Okay. So all I'm doing is I'm waiting for one of these areas, the high or the low, to be swept in the form of a liquidity grab. So if we move price forward here, we're in our time. So price drops down and then we rally higher a bit and drop down. But notice the candle bodies don't close below here. we're respecting this low of the day. Okay. What did we also do here now that we've started to rally away? We created equal lows, right? So this is now also a form of sell side liquidity resting under here. Make this orange. I don't like that. I like here. It's a form of sell side liquidity. Oh, here, because we have relative, not perfectly, but relatively equal lows here, paired with the low of the day so far, or the Asian lows, London lows, whatever you want to call it. So, all right, guys, I want to take a quick break to show you guys the mentorship on offer still. It's on offer for $49.99 for lifetime access. You're going to get all my strategies, live trading sessions. So trade with us live Tuesday through Thursday. We got lots of trade recaps. You get one-on-ones with me, weekly webinars. We have tons of people passing their prop firms in here, getting their certificates. Everyone's winning. Even today, on days that I'm not trading live, we have people just winning. So there's tons of extras in here. Market reviews, the full silver bullet strategy, beginner basics, some advanced ICT stuff, and tons of extras. So we have a bunch of free trading psychology stuff in here. So it's an amazing community. Come trade with us live. It's a small one-time fee, so you don't want to miss out because the price is going to be going up here soon. So let's get back into the video. Price rallies higher, right? Now we do create a fair value gap right in here. Okay, so if we go back a couple bars here, okay, we have a swing high. Now, what is a swing high? It's another 3 candle pattern that creates this kind of this trident pattern. See this swing high here? So it'll look like this. Okay. So a swing high the middle candle will be the highest point. The candle before and after will have a lower high. If it's a swing low, it's the opposite. The middle candle will have the lowest point, and the candle before and after will have a higher low. So here we have this swing high in the form of these candles here. So once price aggressively, let me do this. Once price aggressively moves to the upside, look at that. So this is a form of displacement. So much volume coming into the upside that we break this high and the candle body closes above aggressively here. So this is your market structure shift, a shift in the change of direction here. Okay. And then it moves so much that it leaves a gap here, right? So if we use these 2 bullish candles and this 1 bearish candle, in between candle 1 and 3, the high and the low, there's a gap there, right? So price was only delivered for buys here. So in order to be fair or give fair value, because there's a fair value gap here, then price has to come down in the form of sells to offer selling opportunity. So on the next candle, what does it do? It comes in offering sells opportunities and completely fills in price here. So you could take a buy off of the top of this fair value gap box. For S&P, our stops are going to want to be 5 points or 50 pips. Okay, so here we have 5 point stop or 50 pips. And then we're going to target a form of buy side liquidity. So our minimum for take profit 1 would be 5 points here for a 1-to-1, which coincidentally lines up with this swing high here, and then there's also a small fair value gap right in here. Okay, so price is probably going to want to come back up here, offer it for buys because it was only offered as sells here. So this is a fair value gap, and it was only offered for sells here. So in order to create fair value in the market, it has to come up and trade as buying opportunities. So to note here on Monday, June 12th, it is the day before some big red folder news that's coming up this week. So what happens the day before big red news events like this is the market becomes really, really choppy the day before. So Mondays tend to be also kind of choppy, even if there is no news. So when you combine the two, it's going to give you a lot of choppiness. Now, does that mean you can't catch the moves? No, that does not mean that. I mean, you could catch some nice runs. There's definitely potential, but I suggest it be more for like experienced traders. If you're not experienced in some of these concepts, then you're going to get chopped up in here. It's going to mess with you psychologically, and you could potentially just blow your account and take some unnecessary losses. So, and that goes for the same for red folder news days. Okay. So moving forward here inside of our window, silver bullet window. Now look at price action here in the side of this fair value gap all the way across. We run all the way across. Look at the wicks here. Notice how the wicks are spiking through, but the candle bodies are respecting this gap in here. So just like ICT says, and I preach all the time, the wicks do the damage, but the candle bodies will tell the story. Okay, so far we're respecting this. We move forward. Drops down. Almost takes you out there. So what does it do? If we move our sell side over, we sweep liquidity one more time. So if you're holding this, you're still in here, depending on your broker and spread, but we've swept that sell side in the form of those relative equal lows here, just near the tail end of this window, okay? Go down one more time. Now look, another big volume push to the upside. We leave a small gap. And here, price returns in to this gap here. Then ultimately, the thing with this strategy is you can enter, as long as your entry is inside of this silver bullet window, then you can hold all the way up. I like to hold at least into 12 p.m., which is the New York lunch hour. So this would be our take profit one here. We'll set this. And then for a 1 to 2, we would want to go for at least 10, with the idea of taking out the London high here as our next draw on liquidity. Draw on liquidity is like a magnet. Where is price going to want to be pulled to next? So we hold on to this trade and move forward. Prices dancing around here. So you notice, like I just said, we get a lot of consolidation here, just choppiness. But with our concepts, we know that we have this fair value gap. We swept liquidity and we created another fair value gap. And we're using midnight opening price. If you notice, even through Asian and London session, we've bounced off of this midnight opening price, stuck around it as a magnet, and use it as quote unquote support. So we continue forward here. Price finally makes a run. So I like to call this the lunch run. We run up. There's your 5 points there for your 1-to-1. So if you wanted to, you could potentially trail here in hopes that you don't get stopped out. Let's do this there. Okay. Price almost takes you out there. Definitely probably takes you out there. So I would want to be out here at 5 5 points, secure your 1-to-1. Now, if we move price forward, and let's say you were just to hold this and go at least break even, then price rallies up higher into the lunch hour, and then ultimately hits your 10 points. Now, let's look to see if we get this London high swept. Because typically what happens is once a sell side is taken, then buy side is next, right? So we've taken sell side in two forms here, the low of the day and these relatively equal lows from the New York opening session. So move price forward here. We get a pullback just before a rally higher. And then just at the start of the PM session here, we take out those London highs. Here we have another example, okay? We have our London high, London session low, which is back here. Here's our silver bullet window. As you can see here, we take out sell side, wick through, and then we start shifting higher, okay? This is our swing high put in. We get a wick above, but we're waiting for our candle body closure to confirm a break of the high, right? We want candle body to aggressively push up. So again, you can use this gap just before the session open or the silver bullet window open here. As you can see, we took out the London low, which is our sell side. Then we've pushed up aggressively, leaving this fair value gap. And if I take off this indicator here, you can see that we tap in here and then we start to move up. All right. Now, let's say you didn't catch this one because you're waiting for inside of the window here at 10 a.m. to start. So we would wait for another displacement candle or bullish candle to form. So there we have a big push up. Wait for the third candle. Internet's lagging here. There we go. So as you see, we'll go back one. We have 1, 2, 3. This 3 candle pattern. There's a gap in between here. Big bullish engulfing candle leaves this gap here. This is your fair value gap. Okay. So we're targeting the London highs here. Now you can look for another higher time frame PD array. So these are our rules here. Move these out of the way. So if we look back, we have some swing highs up in here. So I would go to like a 5-minute and see. This was Thursday. We'll go to Wednesday. This was previous day's high. We don't want to go that far. Previous day's high. On the 15-minute, do we have any 15-minute gaps that we can use as a run on liquidity? This was a 1-hour gap. There's one there. So there's a 1-hour, very tiny fair value gap here. We move price over here, go back down to the 1 minute. Okay, so here we have this. This is our 1 minute fair value gap here, or our 1 hour. I'm sorry. So if you didn't get in down here right at the beginning of the session, there's a gap there. We'll enter our long here. Again, stops at 5 and our take profit 1 at 5 for a 1-to-1. Okay. So let's see if we get tagged. We get tagged in here. Move over, tagged in there. So if you notice, we create another fair value gap here. So if you didn't get in there, you can get in here, which stops at 5, take profit at 5. So same rules would apply there. Push up. So we come back, we tap into this fair value gap one more time. So you notice how the candle bodies, again, candle bodies are respecting wick, wick, wick. We wick in here, but the candle bodies are respecting this fair value gap. So that being said, we know that this fair value gap should not return back down to this one. Okay. So because we had a small pierce into this gap and then aggressively pulled away, this would be considered your breakaway gap. Okay. Just barely taps in and then it breaks away. Right. So we go next candle right there. There's your 5. If you would have got in on the second fair value gap, with your 5-point stop there, 5-point target there. Both of these, even if you got in late here or here, both of these hit for a 1-to-1. Okay. So thank you guys for watching. If you have any questions, feel free to comment below. Hit that like, comment, and subscribe. And until next time, guys, trade safe.